to Sectors Up Close. I'm Elena Casas. Today we're talking Turkish stocks and the Lira, and my guest is Stephen Schoenfeld, CEO of Market Vector Indexes. Turkey goes to the polls in May or June, and the outcome will be one of the biggest geopolitical headlines of the year ahead. The country is struggling under a crippling cost of living crisis, with the official rate of inflation at a 25-year high of 85% in December. Much of that is fuelled by the unorthodox economic policies of President Erdogan, who has responded to rising prices by sacking several central bank governors and cutting interest rates to 9%. In recent days, he has further boosted the supply of cheap money by doubling the minimum wage, hoping to boost support ahead of the election. The Lira, though, has continued its plunge from around 9 lira to the dollar before the currency crashed in November 2021 to almost 19 now. But even accounting for that fall, the Turkish stock market achieved a world-leading rally in 2022. This is the MSCI Turkey Index. It surged over the course of the year in dollar terms as Turkish investors sought to move their fast-eroding savings out of the Lira. So what's in store for 2023? Let's ask Stephen Schoenfeld, CEO of Market Vector Indexes. Stephen, hi, thanks for joining us. Let's start then with that huge surge in the Turkish stock market in 2022. What pushed it up?
So the predominant move was created by local investors, institutions, and retail investors who, with reduced interest rates and soaring inflation, saw the stock market as the only safe haven for their savings, and they've been rewarded for it. The number of retail investors has surged during the year, and most likely this trend will continue at least till the elections. There's really very few alternatives with the Lira so weak. Interest rates are effectively, the real interest rates are negative. And so the stock market has served as a store of value.
And what about the currency, Stephen? Are you expecting anything to stem this plunge in the Lira in 2023?
So the currency has had its major plunge. In the last few weeks, it's sort of, I wouldn't say stabilized, but it's trading like a managed curve. I don't expect another very sharp plunge, especially because some analysts see inflation moderating a little. By moderating, we're talking 85% to 65%, but I don't see another major drop in the currency. I wouldn't call it a source of stability, but it shouldn't be an exacerbating factor.
Has there been an upside, though, to the cheap lira for Turkish exporters, Stephen? President Erdogan this week said exports have risen 13% in 2022, and Turkey's exports to Russia doubled in December alone, since, of course, it's not complying with Western sanctions on that country. So is there an upside here?
Unambiguously, there is an upside, even before we've seen evidence of how they're trading with Russia, and that has benefited them a lot. All the manufacturers, all the exporters have benefited from the cheap lira, including foreign companies based in Turkey. For example, Koç Industries has a partnership with Ford, and the Fords that are produced in Turkey are exported across Europe and the Middle East. Their pricing, their profits have grown as the lira and the cost of labor has reduced. So Russia is a very, outsized example, but Turkish exports across the region, across the world, have continued to grow. And I see that continuing. They have very good economics in terms of trade going forward.
Are there specific areas or specific companies there where you see a particular advantage?
So I mentioned Koç Industries. Koç is the largest conglomerate in Turkey. They have controlling interest in hundreds of companies, but 18 other companies that are actually also listed. They control a bank. They control retail stores as well. So I think companies that have exposure to domestic demand, companies that have exposure to export should do well. The finance sector, even though it has this volatility, so the major Turkish banks like Akbank and Eastbank should do fine.
That election, of course, is still hugely uncertain. Could it be an economic turning point for Turkey?
Absolutely. So if if Erdogan is still considered the favorite, even though the opposition in aggregate polls better, the opposition is divided. Erdogan's government has also jailed one of his key opponents. So we don't know if the opposition will coalesce. If the opposition wins, and there's also parliamentary elections, they could moderate some of these unorthodox economic policies. Right now, Erdogan is surrounded by politicians who generally will agree with him, and he's not getting alternative opinions. If there's a new government or a stronger Congress, we could see a return to more conventional policies. I think in the long term, that is the kind of change that would bring foreign investors back in.
And for the moment, how should foreign investors be approaching Turkey as we go into 2023? I know you say cautiously, but how should one try and play it?
So Turkey has a sizable weight in the broad emerging market indexes. There's no reason to underweight them. If investors wanted to take an overweight allocation in Turkey, I would recommend a broad-based index-based approach. That's what Market Vector Indexes does. But if you wanted to stock pick, I would focus on the exporters, because it seems under almost any of the scenarios during this year, they will continue to benefit.
Well, thanks so much for that insight, Stephen Schoenfeld, CEO of Market Vector Indexes. Well, that's our look at Turkey. I'm Elena Casas, and this is Reuters.